You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. How are you guys doing? Welcome to Masters in Trading Live. At Masters in Trading Live, we get on here at 11 o'clock a.m. Eastern every single morning the market's open. We're going to go over a couple of hot topics, and once in a while we're even going to share that trade of the day. Today is that once in a while. We have a wing-dinger of a trade to share as our fourth topic. So I got four topics for you though, guys. McDonald's, Mickey D's. I eat at McDonald's too much, actually only for breakfast. I got to stop doing that, but it's very, very convenient, and I like their coffee. Mickey D's had their worst quarter since COVID. In the last 13 quarters, McDonald's lost money. For I think the first time down on revenue in the last 13 quarters. Stock's up. Interesting. Let's look at Starbucks. Let's look at McDonald's, excuse me. Then I want to look at Starbucks. I want to look at a metals divergence. And then finally, I am super excited to share the trade of the day. So let's get going. We're going to start off with a little screen share. McDonald's. Every time that I'm trading, I'm always looking at correlations. We want to look at divergences. There's no such thing as something being expensive or inexpensive without comparing it to something else. Nothing is just valued on its own. So let's start here. And we're going to start here with Starbucks. Here's all the colors. So the white, this is Starbucks. McDonald's is going to be this purple. Dresden, where they own a whole bunch of fast food companies, is going to be this light blue or cyan. And then Yum Yum Brands is going to be green. This goes back to 2020. We're doing this on a weekly. My biggest issue that I see with traders is they have an opinion. They get into a trade. And then when the market moves, they lose confidence. And they think, oh shit, maybe I'm in the wrong position. My trade's going against me. Maybe I like something else. And they lose confidence and they push themselves out of the trade. And what I mean by being confident is if you get into Starbucks right here because Starbucks is inexpensive, hold. You want to hold until it comes back. So you see how these stocks push and pull off one another. Look what happened if I go to the next slide. The next slide, let's only look at Starbucks and McDonald's. They are highly correlated. They are really big coffee companies at this point, but Starbucks and McDonald's have been trading with one another, right? Starbucks has been offered since 2023 relative to McDonald's. McDonald's just had shitty earnings. What about if we look at Starbucks versus Yum Yum? Correlated, closely correlated, holds up strong. Starbucks since October, or actually going back to 2023, has been offered, right? Yum Yum was offered, went bid, came back a little bit, but still over the same time period, you're up 10% in Yum Yum and you're down 20% in Starbucks. What about the next one? We have McDonald's, Dresden. McDonald's and DRI, they're brother and sister. They don't go anywhere without one another. Starbucks used to be invited to their party, but whatever happened, they no longer allow Starbucks at the party. So Starbucks is trading very, very, very inexpensive to its peers. The trade of the day is not going to be in Starbucks. Although, if you did get long Starbucks, I think that's a pretty good do. But for the trade of the day, I got an even better trade. So I'm not going to say this is the trade of the day, even though I do like long Starbucks right here, long stock. Let's look at the metals. The metals are moving all around. And when we talk about correlations or divergences, there is no better sector than trading the metals. So let's look at precious metals. Precious metals, silver, gold. Oh, that's convenient, Johnny. Look what you did. Gold is going to be blue. Silver is going to be this yellow. Platinum. Palladium is not even on here because it's not liquid enough. And then copper. going back September 2022. Here's a trade that we do often. We just follow these lines, and when these lines break down right here, this is copper is inexpensive relative to the other metals. Does that mean that you have to go buy copper futures? Heck no. But copper is correlated to builders. Copper is correlated to other metals. Copper, you could trade FCX, Freeport-McMoRan. So if there's a chance to buy, in this instance, copper, we like to say the creative trader wins. You don't have to just buy copper, but what you want to do is buy things that are correlated to the price of copper. Right now, gold, strong, silver, weak. Gold-silver ratio right here. You can see silver going down while gold is going up. At the same time, copper is going down, platinum's going down. It looks like it caught a bottom. It looks like platinum's rallying. We have platinum in our promotional portfolio. The reason we are long platinum in our promotional portfolio is look. Inflation is skyrocketing, but yet the price of platinum is lower than it was in 2023 with inflation and the rest of the metals way higher. That's the reason for getting long platinum. Here we're just looking at those two correlated instruments. Did you realize the oldest known correlated instruments to be traded is gold versus silver? These have been traded against one another since the 1850s, and you can still see how tightly correlated they are, except lately it looks like silver has been breaking down relative to gold. So for traders, if you wanted to do a trade, sure, you could buy silver futures, but that's really expensive. So instead of buying silver futures, you may look to buy silver miners. You may look to buy a silver ETF that invests in silver bullion. Lots of different companies out there that are also correlated to the price of silver. And this is what I mean by the creative trader wins, because just because silver is inexpensive to gold, doesn't mean you got to buy silver. Get creative. Copper. I want to take copper back to 2015 just so you could see how volatile it is. But also so you can see, going back to this chart, and you look at copper, and copper is offered against the other metals. Well, if I take you to the long-term pricing of copper going back to 2015, by the way, this charts everything in a one lot. So if you bought a one lot in 2015 and you sold it today, you'd be up $21,000. Goes lower, comes right back. Copper is still kind of mid-range, and if anything, relatively expensive longer term. So the trade that I'm going to share with you, it's not going to be earlier Starbucks, because I said we can do better than that. It's not going to be copper either, because we can do better than that. No. The trade that I'm going to share, I'm going to tell you next slide. This slide is just going to show you that copper and FCX, the copper company that I was telling you about, are 100% correlated. Maybe not 100%, maybe 95%, but they are moving lockstep together. Whenever I'm looking at copper, I always want to look at the copper companies. Now, JR, let's get into the trade of the day. The trade of the day, so aptly called the trade of the day. We are spinning wild here. In this trade, silver, inexpensive relative to gold. Going back on this chart, 100% of the time that silver trades this inexpensive to gold, it comes back. Here, silver was trading expensive to gold. Here, silver is trading inexpensive. Expensive, inexpensive. About the same, very inexpensive. We want to get long silver. How do you get long silver? Lots of different ways to get long silver. The one that I was researching this morning, the one that I like right now because of the value in the market. Ready, set, there you go. It's going to be a stock called PAS. P-A-A-S. We are going to buy to open PAS. PAS, last trade, is $21.71. So let me get you the right expiration. I didn't even write it down here. We want to be September. Let's be September 23 calls for $1.05 up to $1.10. Buying September 23 calls for $1.10. Buying to open September 23 calls for $1.10. That's $110 of risk per one lot. The way that I'm going to trade this is we want to buy $300 worth. We may tranche into this with a total of $1,000 of risk. But right now, we want to buy, say, 3 of them for $1.05 or $1.10. That's about $330 of risk. You can never lose more. We're in this trade for 52 days. We may add, we may not, but right now, what we're going to do is we are going to buy to open PAS, Silver Company. We're going to be looking at the 23 calls in September. Now, for a myriad of reasons, I walked you through why I like being long silver. Silver futures are very expensive to trade, so I don't suggest that we walk into silver futures, but a great place to get long is ticker symbol PAS. This is a name that we've traded for years when silver becomes inexpensive, and right now, that's exactly what it is. Underneath masterthantrading.com/live, you'll see our entire promotional portfolio, all the trades that we've been sharing for free since late February. Everybody in all access, you guys hang on. We're going to go over some of our earnings trades. Thanks a lot for watching. We'll see you tomorrow, 11 o'clock Eastern Time.